Stop ignoring fundamental analysis. Stop ignoring what's happening in the market. If you wanted to win, you need to do it right. You need to make some effort. In this video, I wanted to take you on a journey from the Federal Reserve to the stock market to the gold and oil market, discussing some opportunity, ensuring that by the end of this video, you will have a clear vision of the entire market and the situation we are in. But before we start, I want to give you an advice. Don't get stuck in just one market. Opportunity move every day. Sometimes the best move in gold, sometimes it's stocks, and sometimes it's Bitcoin. Don't limit yourself to one asset class. To start understanding the market, the best way is to start with the big player running the market, the Federal Reserve. As you know, the Federal Reserve is expecting a new president. Trump has already announced his candidate. From what we know, this person is a little bit hawkish, but as Trump said, if someone does not promise to lower interest rate, he would not appoint him at the first place. So we expect that he may develop some kind of theory about how AI could boost productivity and change the economic situation. This idea could be that AI increase productivity and that higher productivity can reduce inflation pressure. Because of that, the agreement will be that the Fed should make policy easier and lower interest rate. AI may also increase employment, so we need to lower interest rate because we may see higher employment. But at the same time, what's happening in Iran is pushing oil price higher. And if oil price stay higher for a long time, that can influence inflation. Yes, inflation coming from oil is not something that central bank can easily control just by raising interest rate. But at least they can try to reduce the impact, as we also need to remember something important. Even if there is a new president of the Federal Reserve, there are still other members inside the Fed who have their own opinion. The president of the Federal Reserve has only one vote, just like the other. So this is the situation for the Federal Reserve. Now we can move to the next part of the market. As you know, the Fed is following macroeconomy number, and we have two critical numbers to mention: the non-farm payroll and the employment rate. We see that the market lost 92,000 jobs, and the employment rate is increasing by 0.1 to 4.4. So there is some stress in the deeper economy. Employment is becoming a little harder. Right now we are in the environment of low hiring, low firing. So companies are not hiring aggressively, but they are not also firing a lot of people. However, the employment rate is slowly increasing, but as the employment rate is still below 5%, we can still say that the economy is still in a healthy situation. This is the microeconomy number, but let's see what investors did in the stock market. After 3 years of the stock market going higher and higher, we now in a situation where the market is mostly moving sideways. For about 4 months, the market has been staying in almost the same place. There is no big move to the upside and no big move to the downside. This situation started mainly after the big announcement from the major company about their AI investment. As we can see, many of them, big tech companies, are saying that they will spend a huge amount of money on AI. But investors have their own question: how much profit will actually come from this AI spending? From their perspective, companies are just spending more and more money, and the return is still not obvious, even though we need to talk about the companies that may win the AI competition. Let's start with Nvidia and TSM. Those two companies may be the biggest winner. Nothing is 100% of course, but Nvidia is currently the best company when it comes to AI chips, and TSM when it comes to semiconductor chips. In many ways, they operate in area where the competition is still limited, but when we move to the B2C side, meaning the company that provide AI service directly to users, the question becomes more complicated. Companies like Google, OpenAI, Anthropic, X, all those are working in the same space. Anthropic has built a very strong AI system, and many experts say their updates are extremely good. Their technology makes thoughtful companies cry. At the same time, Google has huge financial power. They have a lot of money to invest in AI. Companies like Anthropic and OpenAI do not have the same level of financial resources as Google. However, Anthropic is now for having very strong AI technology. Anthropic has also received attention from government. They want to use their AI system, but Anthropic decided to put some limit on how its technology can be used. Because of that, the government started putting some pressure on the company. We can see that the United States Department of Defense, the Pentagon, stopped working with them and even classified them as a risk to supply chain. So the question becomes, who made the new deal with the government? Yes, it is OpenAI. Some analysts even agree that OpenAI may currently be slightly weaker in this competition compared to Google and Anthropic. However, OpenAI still has something powerful. brand recognition. Many normal users simply call AI ChatGPT. But if you are a normal user and you compare AI tools like Gemini and ChatGPT, you may notice that Gemini often gives more features for free, while ChatGPT frequently asks users to upgrade to Pro. So in this case, we have Google with massive financial power, Anthropic with very strong AI technology, and OpenAI with strong customer recognition. This is the current situation of the AI competition. Many experts in this field say that Google may be the one of the strongest companies to beat on the long run, but technology, especially in something as new as AI, no one really knows the final winner. Even if you know which company will win, you need to see the geopolitical tension. And if you are someone who read for Ray Dalio, the big investor, he's saying that geopolitical tension, one of the 5 factors or one of the 5 forces that moving the economy. This leads us to Iran. As we see under the leadership of Donald Trump, the situation is getting a little strange. Trump is not an easy person to predict, and it is always difficult to know what his next move. We can expect that this war will probably not last more than 1 month. The reason is that the Iranians may try to expand the war and involve more players, which could make the world less safe, less stable. Because of that, the USA would prefer to stop the war. At the same time, the USA may believe that it can destroy key infrastructure in Iran, which could weaken Iran's ability to contain the war and push the situation toward a faster end. But we need to know that the probability that this war will end before March 31 is currently around 13% in the production market. And this war is affecting multi-market. Let's see gold. So gold and silver made a tremendous move during the last year, but after the announcement of Kevin Walsh, that moment act like the event that burst the bubble. Now, when I say bubble, I don't mean that gold is finished or over. But when you see gold moving 70% in just 5 months, that's not a normal move for gold. Right now, gold is about 7% below its top. And since then, the price has mostly been sideways. Yes, we lost around 20% from the top in the last move, but something important also happened during this period. Gold may have entered a new age. Maybe we never see gold again at 2,000 or 3,000. Those levels may be disappear in the long term. Now we may be entering a world when gold above 4,000 is a normal thing. That's a huge achievement for gold because it would mean that those high prices are now accepted by the market. One of the big reasons for this shift started when the United States and Europe frozen the Russian reserve during the Russian-Ukraine war. At that moment, many countries start to think maybe it's not completely safe to depend too much on the Western financial system. So many countries start looking back to history and they find the asset that people trust is gold. Because of that, central banks around the world begin increasing their gold purchasing, and that is one of the key reasons why gold reached those new levels. Now the question is, what do you experts think? Are they bullish or bearish? What are the banks saying? What we are seeing right now is that geopolitical tension is still very high. As we talk about Iran, central banks are still buying gold and investors are still using gold as a hedge against risk. So the main fundamental that pushes gold to those strong prices are still there. Because of that, we cannot say that this is the time to sell gold. Right now, it looks more like the time to hold gold or maybe even buy gold, but not really time to sell it. But some of you may ask, what if gold goes down? What if something changes? A smart investor or trader must always be ready to change their opinion. Maybe every month, maybe every week, whenever the market gives you a new information. You should build your opinion based on the market, not based on your ego. Personally, I am completely fine to say that I was wrong about the market. This is not a problem at all. In fact, this is one of the things that make you a good trader. The ability to change your mind when the market gives you a new input. Let's go back to gold. We are seeing a small upside move in gold again. It's not a huge move, but it is happening mainly because of the geopolitical tension between Iran and the United States. And yes, you may notice that I mentioned the Iran and USA conflict many times in this video, because this is the situation we are living in right now. It is a war situation involving one of the biggest superpowers in the world. So whether you like it or not, this is the conflict affecting everything: oil, gold, stocks, and the entire global market. War is not a good thing, but it is the reality of the moment. But as we talk about Iran, we need to talk about oil. Oil made a wonderful move. The key issue was the tension around the Strait of Hormuz. This strait is Extremely important because around 20% of the oil supply go through it. So when the market started worrying about possible distribution there, oil prices reacted very quickly. Because of that, it was a clear opportunity for traders. But the move started to slow down after a statement from Trump suggesting that the war could end in short time. According to those statements, Iran has already lost a lot of capability and their conflict may not last very long. We need to remember something important. In a conflict, even governments say that the war may end soon. You can never be completely sure. That means we still need to watch the news carefully because the situation can change very quickly. One key factor to watch is whatever any Gulf country become directly involved in the conflict and launch strike against Iran. If something like that happens and the war expands, oil prices could easily move higher. For now, it looks like the Gulf country do not want to involve directly, but in geopolitical tension, situation can change fast and involvement is always possible. A good question will be, what does all this say? Where is the opportunity? In my opinion, MENA country may have a good opportunity right now. When we talk about MENA, we mean countries like Saudi Arabia, Qatar, United Arab Emirates, and Egypt. Especially the Gulf country. Egypt is a bit different and I still have some caution about it. But countries like the UAE, Qatar, and Saudi Arabia have a tremendous amount of money and they're working hard to improve and develop their economy. Because of that, I have some trust in their long-term economy direction. My idea is that when the war ends, those countries could benefit from return of stability in the region. Because of that, we may see good opportunity in their stocks. This could be like a war-buffed buying strategy, buying when people are panic. Right now, I'm watching this market carefully and looking for possible trade, especially in Saudi Arabia, because it is a very large economy with a GDP around $1 trillion. The UAE and Qatar also have a strong potential. They have a lot of capital to invest. Of course, this is not a financial advice. We are just discussing idea and trying to simplify the situation. I am sharing my thought with you and maybe you can benefit from them and maybe I can also learn something from you in the comment. I would like to know what you are watching in the market right now, what opportunity you see and what trade you believe in. But the most important thing is always the reason. Why? Why do you believe in it? What do you think that opportunity exists? And of course, don't forget the basics, risk management, diversification, and hedging can be also very useful. You need to watch your portfolio carefully so you can benefit from the market while protecting yourself at the same time. And of course, keep your psychology strong, keep learning, keep observing the market, and keep improving your thinking. One of the things that I personally love about following the market is that you start to understand the world better. Every day you follow the news, you see what's happening in different countries, and you start learning how economy work, how government think, and how decisions affect the global system. In many ways, you are watching capitalism in action, and you see how it shapes the world, and maybe one day you will discover that capitalism is not perfect. Personally, I have a lot of doubts about it. It can create a lot of pressure on people, always pushing them to achieve more, to work more, to reach the next goal. But anyway, it's just a small thought from me, not the main topic today, just a conversation from one friend to another. So thank you for watching. I hope you subscribe and continue to follow the channel. I wish you a good health, a good life, and a successful trades. And I will see you next time with another market update and the new opinion about the market. See you.